Welcome to FXStreet. If you like what we're talking about, you like the content we are producing, head on over to YouTube to our channel and hit the subscribe button, and you can follow me individually on Twitter at JustAnalysisOne. Taking a look here at MATIC. So, MATIC has had, huge moves lately. You go back to the middle of the month, the 14th or 15th of December at the lows, or even just the open and the close there. It rallied all the way up to from, a dollar. What was that? A dollar 81 up to 291, almost to $3. I'm sure some exchanges had that, but really over was that like an 11-day, 12-day period, you went up almost 61%. And then you had an understandable drop down. The gaps that were occurring between the bodies of the daily candlesticks and the Tenkan-sen were just kind of getting a little bit excessive. So a pullback down here was normal. But this rising wedge pattern, this has been the kind of thorn in the side of MATIC bulls for a while, because a rising wedge, excuse me, is an inherently bearish setup. Out of all the geometric patterns that exist in a candlestick or American bar chart charting, this is the kind of creme de la creme of uber bearish patterns. It's one of my favorite patterns. I look at falling wedges and rising wedges. Those are my two favorite basic patterns because they have such a high positive expectancy rate. But MATIC has tested a breakout above it 1, 2, 3, 4, 5 times ever since the end of October. And it has come back down into it, but it's failed to break down below. This test here is probably one of the most important that MATIC has seen for a long time. We're testing the breakout above that rising wedge trend line. We're testing the daily Tenkan-sen. We do have a good support zone here in the 2021 volume profile, but I tell you, overall the structure here looks a little questionable, and we're in a bull market still within the RSI on the daily. We're not oversold anywhere. We do see a pretty sharp drop. This is one thing that is beneficial. So when you look at the composite index, it's the middle oscillator down here. Look at the trough that was here on the 20th. Compare that to the candlestick up above, and then compare it to the trough. Compare it to where we are now. You have these lower lows and a lower close on the composite index, but you have higher lows and higher closes on the candlestick chart. And that's hidden bullish divergence, which is only valid if something is in an uptrend, which it is. And this is very nice to see, especially if the instrument is trading near a support zone, which it is. So there is a very good chance that support holds here, and we continue to see it move higher, kind of suck in a little bit of bears here as a trap, so to speak. But when you come over to the weekly chart, this weekly candlestick does not look healthy at all. This is a very ugly looking bearish candlestick from a time perspective. Actually, from a time cycle perspective, it's fine. Yeah, there's nothing actually to worry about. The RSI is still in a bull market. Not sure why it adjusted, but 50 and 40 are the oversold levels in a bull market. We're not overbought either, because 80 and 90 are the overbought. So there's nothing on the weekly chart besides this candlestick pattern that warns of any major downside pressure. The only thing that does is the current body of this candlestick and the Tenkan-sen. Within the Ichimoku system, gaps between the bodies of the candlesticks and the Tenkan-sen, they don't last long. They often correct at max with between 4 to 6 periods. So this could keep going higher and extending away, but just be aware of that as you extend further from the Tenkan-sen. The odds of, I think that's actually what's contributing to why we had that big drop. So it may sustain this level. As far as downside, kind of getting along into this video, but for MATIC, downside potential should be limited to the 205 to 210 range. Upside potential likely limited to $3. and we'll update this later on this week as needed. Thank you all for watching. Please don't forget to like, comment, and subscribe.